Hey everyone, it is Evan here from the Trade Risk on Friday, September 20th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump right into our dashboard here. And actually, first things first, we did have the SPY Go X dividend here on Friday. So if you are looking at the SPY ETF, if you're charting it this weekend, if you're looking at these returns here, do just remember that those numbers, that price that you're seeing there is a bit skewed to the downside due to the dividend payout. You'd want to look at the cash market, cash settled market to get that true adjusted price. So with that said, it was still a negative day here on Friday across the board. Everything finishing lower by about 0.5% all the way up to 1%. Russell 2000 trying to act a little bit stronger here. And in the 5-day numbers, all coming in firmly negative as well, about 1% to the downside. And you can see we actually starting to lose the 10 simple moving average in some of these major indices. We are still above the 50 and the 200 right across the board. If we scroll down a bit further here, we take a look at sectors. You can see mostly things in the red this week, but we did have a couple of standouts here. It was more defensive tone. It was utilities, it was biotech, and it was healthcare rounding out the top three. And on the downside, we had transports, we had semis, and we had consumer discretionary. In terms of major markets, we saw some rotation into the VIX, up 11% this week, followed by USO. Remember, oil had the big pop to start off the week. We did kind of fade off of the highs of the week, but still strong gains. And then TLT to round out the top three. On the downside, it was natural gas, it was China, and it was emerging markets. So with that said, let's jump into the charts here with the S&P 500. This is the cash market, and this is a weekly time frame, so each bar represents 1 week worth of trading. And what you'll notice here is this week we did finish lower by minus 0.39%. So notice up here the SPY is showing minus 0.97%. That is the dividend payout here on Friday. So we did close just slightly in the red this week. And notice the range here this week. This was an inside week, so that means we traded entirely within the lows and highs of last week's trading range. So when we look here kind of at some of the major levels and where we are in the market, structurally, nothing changed this week. We traded entirely within last week's range. We didn't break out. We didn't break down. We really just went sideways and chopped around. We are still just under 1% away from the all-time highs. So resistance above us at 3,028, that's still there. And that's still something that we are eyeing for a potential breakout. That is, of course, the bull case, is that this market resolves and clears and breaks out to new all-time highs. And on the downside, we still have this about 2950 area. You could use last week's lows, which would be approximately 2957. You could use the round 2950. You could use a little more precise on the August highs up here around 2940. But all in all, it's this general zone right in here, right around that 2950, that the market is going to want to hold if it is going to hold up and try and retain the momentum, retain the breakout that we saw just 2 weeks ago, to keep this market looking on the bullish side or have a bullish tone to it. We're going to want to hold above that area. So that's sort of the broad bands that we're looking at. We lost a little bit of momentum this week. We had that August breakout to start off the first week of September. We got a follow through week, and now we're going on an inside week, mostly sideways. So we are still holding, say, this 4 or 5 week trend up here, so that's still intact, but we did lose a little bit of momentum. And if we do continue to sort of chop around here, and if we do happen to roll over and start to move back down, that of course would be some bearish developments in the short term at least. But for now, we'll take it one step at a time, 1 week at a time. We're moving sideways. We're just under 1% from all-time highs, and some consolidation here sideways through time before a potential continuation pattern. That of course would be the most bullish and optimistic case there for the bulls at this time. So that is the S&P 500. If we go down to a daily chart here, You can see basically the same thing in some of the chop that we just talked about here. Over the past 6 trading sessions, we've gone absolutely nowhere. We've digested the Fed. We've digested more, tariff and trade talks. And, we're really basically just kind of staying sideways here and waiting for the market to make up its mind for this next move. If we go to the Russell 2000, remember the Russell had this impressive catch-up week last week. It was up 5%, really standing alone here, really making a pretty convincing move back up to a year-long high up around 159. And once again, it also kind of pulled back. It had an inside week. It dropped 1% this week. It was up 5% last week. It pulled back 1% this week. So if you keep things in perspective here, again, kind of a pullback sideways development here, and it's in the bull's best interest to see if we can hold up, put in some type of higher low, mostly consolidation through time, hold on to the majority of these gains, and that of course would set us up for a potentially constructive continuation pattern in the coming weeks. Of course, it doesn't have to be that way. We could still just bounce around and we're just another trip to the top end of this range, which is going to get rejected and we eventually pull back down. That's of course a potential scenario that we want to keep an open mind about. But for now, the Russell 2000, I think if we look at it in the context of the past 2 weeks, seems like a pretty reasonable pullback here. And maybe next week we'll see just how determined the bulls are to kind of step up and put in some type of higher low here for the Russell 2000. Structurally, though, again, nothing has changed here this week. We still are waiting for a potential breakout of that 159 level. Last but not least for the major markets is the Nasdaq 100. Again, an inside week getting printed here. We're falling back towards the bottom end of last week's range. We are approximately 3%, 2.5% away from prior all-time highs. We are still holding on to this multi-week trend line that has been in place since the beginning of August. And if we do start to, roll over or get follow through to the downside next week, that of course would be something we want to take note of, get defensive about, at least in the short term. But until and if that happens, we do want to just see how this consolidation shakes out and how this market plays out just under these prior highs. So that covers all of the major markets there. A little bit of a pullback right across the board this week, and next week we'll start to measure on how deep and how serious the sellers are at this level here and whether or not they can actually start breaking down through some support. So if we get to some of the other major markets now, we'll go to TLT next, which again here on the weekly chart shows a nice snapback. Again, this had an inside week as well. This had a really large range down week last week, 6.34%. We bounced back about 50-60% of those losses this week, and if we go down to a daily chart, you can see we did kind of a V shape off of this 136 and change level, which was the ultimate low that we made back on Friday. We've got a nice bounce here, and it'll be interesting to see if the bulls can keep this going right now. Long-term trend still intact, still holding the multi-month trend line here. So TLT bulls getting it back, getting it done again in at least the short term. If we go to gold next, we can see this had a nice session here, particularly on Friday, is where most of these gains came this week. It tried to take out the prior week's highs here, but it moved back to the upper end of the range. You can see this consolidated more so sideways here, found support around 140, and then it's starting to turn back up here into the end of the week. So buyers still stepping in on the gold train here and holding it up, keeping it technically still intact. And if we look at silver here, also very similar here, had a nice session on Friday. Volume was pretty much pretty light this week. We did have that nasty kind of finish to last Friday's session, last week's session, but we popped right back on Monday. We went tight and sideways for most of this week, and then followed by a strong finish to the week. So once again, we're looking to see if the buyers are stepping in here for silver. So far, longer term trend still remains very much intact. Now, energy was an interesting space this week because Monday we had to kick off the beginning of this week. We had this big pop. We were up over 15% intraday, and you can see a lot of that did, or I shouldn't say a lot, but a good portion of that faded into the finish of the week. We still have this open gap in here. We are still holding. We did make forward progress this week. If we look at a weekly chart, you can see just how much volume came in, about 200%. The normal 20 week average So a lot of volume came in, and we did resolve, and we're still currently holding above this $12 level in the USO. So I think this is an important hold here. If we can continue to stay above and defend, and bulls can defend this $12 level as support, I do think that we have, potentially a nice little trend that could emerge here, develop, move back up to at least 13, and maybe back up to the April highs around 13.75 or so. But if we do start to lose 12, if we come, kind of filling this gap and kind of breaking back below abruptly below this $12 area, then sort of all bets are off as we lose this prior resistance level again. So oil pretty much in play there, lots of volume coming in, headline driven at this point, but we'll see how this can follow up this type of action. Last but not least, for commodities here, energy is natural gas. This was also down this week, 3.61%. It's had a nice, really a nice 5-6 week run here from the lows around $17 all the way up to the highs made this week around $23. This was about a 30% move off of the lows in about 6 weeks worth of time. So about a 3.5% pullback here seems pretty reasonable to me. Again, we're looking now to see just where the bulls are going to come in and defend. We broke and snapped this accelerated trend line that we've been in for the past couple of weeks. So it'll be interesting to see where we can put in a potential higher low here. That'll be the next thing to pay attention to if you're bullish here on natural gas and want to get involved. So that covers all of the major markets. Let's jump into some sector analysis now. Take a look at the best performing, worst performing sectors. So we can see on the upside here, IYR, this was the #1 performing this week. This is real estate. As you can see, it moved right back to last week's highs. This had a heavy sell-off week last week. It was on the bottom of the underperforming list. It broke down through last week's low, or 2 weeks ago lows, on heavy volume. But you can see we just reversed that entirely, and the longer term trend is pretty much still intact here, still holding its grips here, which is to the upside. MACD is making new highs there on the weekly chart, and we're back to these highs here in IYR. A good amount of volume coming in recently. Take a look at the uptick, the upward slope in the 20 days. So kind of interesting to see the heavy volume, the battle that's going on here as this climbs to these all-time highs. So something to pay attention to in the coming days and weeks. But so far, this trend is still higher. XLU also here, defensive tone to the market, but this acted well this week. It's back to highs. The trend is holding on multiple time frames. Looks pretty good there. And biotech, I think, is pretty interesting here. IBB. We did feature XBI as a trade idea earlier in the week, and I think IBB, pretty much the similar situation here. It broke. I do actually like the way XBI usually kind of shakes up a little bit better here in the terms of kind of breaking this trend line and then on some heavy volume and then going sideways and tight here. I still like that scenario, and IBB pretty much have the same thing going on, just a little bit less, refined and pronounced. Maybe if you take the shorter term trend line, you can see kind of the break here, the move up, and now you can see it's just kind of grinding up here. MACD is leading. So some nice rotation here into biotech, both the smaller equal weighted index and the bigger IBB ETF. On the downside, consumer discretionary here is breaking below some recent support. In fact, it's filling the gap here from from a couple of Thursdays ago. This was when the market broadly broke above the August range. It had that gap up and it kind of continued higher there. XLY is sort of rolling over, kind of filling the gap, and this is the big test. This is exactly where we said in the S&P 500 we want to see this level hold if we are going to stay held up. For the SPY ETF, you can see consumer discretionary a little bit weaker here and already kind of dealing with that retest right now and threatening to break back down below it. So a little bit of ugly development there for XLY. I'd want to be avoiding this until and if it can break back above and show just signs of reversing off of that level. Semiconductors also second weakest this week, 2.5% to the downside, falling back into kind of the lows here right before that breakaway gap as well. It's not quite into that gap, but it is to the lower end of this range here. Picked up in volume, and it had a pickup in range to close out the week. So this one here looks a bit vulnerable as well. And then last but not least is XLI. This is the industrial ETF. This did briefly, start to resolve above this July range here, but it is kind of falling back exactly where it's kind of failed here for most of 2019. It's going to need to hold up, put in some type of higher low, not roll entirely back over to keep this acting well. This one doesn't look as bad as the semis or discretionary, or is in terms of vulnerability, but it still needs to kind of prove itself here as it underperformed on the week. The other last piece of sort of notable information there that I forgot to mention at the top of the video is we did have I believe it was quadruple witching anyway this week on Friday. Just means we had a lot of option expiration going on here, multiple contracts and time frames all expiring here on Friday. Sometimes that plays some games with stocks that or even ETFs that are getting sort of pinned or moved around in certain directions for maximum benefit of OPEX. We'll see again if we have any fireworks or quick moves on Monday to sort of recalibrate after the quad witching is behind us. So that is it. That is what I have for this week's video. As always, thank you so much for tuning in and watching. You can subscribe on our YouTube channel. You can follow us on the Trade Risk. Have a great weekend. And as a heads up, I am going to be traveling next week to a couple of trading conferences. So videos are likely going to be interrupted. I'm not sure if I'm going to be able to produce anything next week, but I'll do my best and try and keep you updated as best as possible. So thanks so much again. Have a great weekend and talk in the next video.